You wake up this morning and there's a 200-page document that we can't seem to get that says that there should be a restriction on AI chips for all but 18 countries. You've got the premier CEO of AI, Jensen Huang, going around the world talking about sovereign AI. And then you have a document, again, it's a proposal, that just basically says, look, there's only 18 countries that should be able to get this. That's going to send the whole complex down. It is absurd in the sense that no one spoke to it. They didn't give it to any CEO to even comment on. It is the last gasp of an administration that basically threw a grenade into the whole complex.
Yeah, although very much unclear, isn't it, Jim, that a lot of it won't be reversed potentially under the new administration or different.
I suspect all of it will be.
Yeah, although it is potentially tough on China. I mean, a lot of it is designed, obviously, around our defense, so to speak, in the larger context, given the threats that AI could pose in the wrong hands and the fact that we always want to be ahead in our development from any of our adversaries. I think that is right. That's at the basics of why they've done what they've done, isn't it?
Yes, but 18 friendly countries, let's say there are 120 countries that might want it. That means there's a lot of countries besides China that now get excluded. You'll see this down a lot. The stock has been very weak. I think Nvidia is terrific. But you combine this, and then, Carl, you've got some numbers that say that Apple's going to be weaker. Of course, the U.S. government chose to meddle in the semiconductor world in a way that defeats so much of what Jensen Huang, the CEO of Nvidia, is trying to accomplish. A series of restrictions came out this weekend that put limits on the number of GPUs Nvidia can sell to all but 18 friendly nations. Look, we all get the game. We're trying to stop China from getting as many advanced chips as possible. I admit that. That's okay. But this 200-page set of rules has become the hallmark of the Biden administration's attempt to treat our businesses as the enemy. NVIDIA is cooperating with the federal government every step of the way. Jensen Huang has spent a huge amount of time going around the globe, though, trying to work with all of the friendly governments, not just 18, to help them create sovereign AI. He knows that America could control everything. That's how powerful we are. But he wants to empower other nations so they don't get subsumed by us. He doesn't want to be the ugly American who dictates the things the way we did during the Cold War. It's one of the best initiatives he's worked on, and now the government's effectively ended it by fiat. Look, you know that I'm no fan of the Chinese government, but the U.S. needs friends. Huang is the ultimate ambassador of goodwill. This move is embarrassing, short-sighted, demeaning, and ultimately a fitting coda to an administration that seems to have it in for business at every turn, unless it's clean energy, of course.
Nvidia's stock has posted another jaw-dropping year of gains, up 171.2% in 2024, leaving investors and market enthusiasts buzzing with interest. And yet, the tech giant is suffering loss after loss in 2025 with no clear pathway to regaining 2024 numbers as of yet. What caused Nvidia to surge in 2024 and fall so hard in 2025? Is the AI buzz dying down, or are people losing hope in Blackwell changing the AI scene once again? As these questions loom large, we'll delve deeper into Nvidia's impressive performance and the influential figures behind its triumph. Welcome back to Investocracy.
Value's been better outside of the USA. It's been better if you didn't take an industry bet. And it's been better if you didn't short a ton of Nvidia. So if value holds its own when it's not having a great time and everything else we do works, that can be a beautiful thing.
Does Nvidia enter your portfolio at all in the quant process?
It enters as a potential stock to own or short. And this will give you some insight into quantitative management. I don't know if we're long or short.
Right, because there's just so many positions at all times.
So many positions that are all small. So I often joke, though this hardly ever happens, that the only time I know about an individual position is either something very bad has happened.
Or very good.
No, they don't even bother me with that. Or I'm going on TV and sometimes I cheat and look up. But I didn't look up in NVIDIA. I would guess it looks expensive, but looks pretty high quality.
53 times earnings or so.
Yeah. But that's not the whole process. For instance, profitability, how much money you make, given the size of your equity or some other scalar that you can make it relevant. We love that. In true bubbles, people often hate low prices and don't care about profitability because they're only paying for dreams of future profitability. So we don't enjoy those. But a year where the really cheap multiple stuff doesn't do well, but really profitable stuff does great, that can be a great year for us.
What sets Nvidia apart is its ability to consistently exceed Wall Street's quarterly targets, achieving revenue beats that sparked investor confidence and market admiration. For instance, in Q4 of 2024, Nvidia reported revenues of $22.1 billion, soaring past the anticipated $20.62 billion, a resounding 7.2% beat. However, 2025 has not been entirely devoid of challenges. Nvidia enjoyed early gains with announcements from Microsoft of an $80 billion investment in AI data center capabilities. As Nvidia's GPUs are crucial to advanced AI systems, this seemed a surefire avenue for growth. Yet, macroeconomic factors have cast a shadow over these plans. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Send it to Christina Partsinevelos now for a look at Nvidia. That stock is falling in today's session, as we said at the very outset today, Christina.
Well, you have the company's powerhouse customers. We're talking Microsoft, AWS, Google, and Meta. They're reportedly hitting some snags with Nvidia's latest Blackwell chips. They're dealing with overheating issues and glitches, and the information is reporting some might actually scale back their orders. Not great timing when these cloud giants are also racing to build their own AI supercomputers. HSBC just weighed in about a warning about supply challenges. They're saying these issues could drag on through early 2026, and they're skeptical about Nvidia keeping up its impressive streak of beating revenue forecasts by $2 billion each quarter, which brings up the question of sustainability. And then there's another twist. Remember those new Biden administration rules about exporting AI chips? Well, analysts at Wells Fargo, Bank of America, Wedbush, they all think it might not actually stick. And here's why. There's an unusually long 120-day comment period, which means if Trump, once his administration goes forward, they could potentially revise these restrictions. Right now, about 15% of Nvidia's total revenue is exposed to China, but that portion has declined just over the last few quarters. Yes, it's a little bit higher compared to Q2, but they have said it's declining. So between those technical hiccups, the supply chain constraints, and regulatory uncertainty, Nvidia's definitely got quite a few balls in the air right now, and that's why the stock is down 2.5%.
Welcome back to Overtime. We got some news on Nvidia. The European Union commenting on the Biden administration's further restriction of AI chip exports, news that hit Nvidia shares in the regular session and that Nvidia itself blasted earlier today. The EU saying in a joint statement, in part, "We are concerned about the U.S. measures," adding, "We believe it is also in the U.S. economic and security interest that the EU buys advanced AI chips from the U.S. without limitations." The statement adds that the EU has shared its concerns with the Biden administration and looks forward to engaging constructively with the incoming Trump administration.
The U.S. Bureau of Labor Statistics reported unexpected job growth in December, which heightened concerns about inflation, hinting at possible stock market volatility. Further compounding difficulties, rumors of expanded U.S. restrictions on AI chip exports to China and other rival nations pose threats to Nvidia's international operations. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We actually saw shares a little higher in the morning, maybe not by a lot, but it certainly wasn't giving back the pullback that we saw later in the day. There were a lot of the tech stocks and other big high flyers that pulled back, though, after we got stronger than expected jobs numbers, just in terms of what the BLS had in terms of jobs openings, those JOLTS numbers. That had people suspecting that maybe the Fed is going to be more reluctant to cut rates anytime soon. And that caused all of these big high flyers to pull back. So do you think the pullback in Nvidia's shares yesterday was more related to what Jensen Huang did or didn't say, or just more related to the overall idea of watching the Federal Reserve and seeing how the economy is doing?
I mean, I think both of those play a role. I think there were also very high expectations around the keynote at CES. And, you know, CES is a trade show oriented around consumer and automotive. And there were some really important developments that came out of the keynote around those markets. but data center is 85% of the revenue. And I think, there may have been expectations that people wanted to hear more about that. So I think you have some of those issues. But, overall, this is still a company in a very strong product cycle, and data center wasn't the focus here. It's investor focus, but, it's still very strong. So I think it's a combination of some of the market issues that you talked about, as well as maybe some expectations issues around the trade show. But there was really nothing negative to take away from it.
Yeah, what could he say in terms of the data center that the street would really like to hear? I know that the revenue is expected for the fiscal year that ends this month, to come in at $113 billion, ramping all the way up to north of $200 billion by the fiscal year that ends in January of 2027. What do people want to hear on that front?
Well, expectations are high. I think we're 2 months into the Blackwell cycle, the new products that they just started shipping. So I think to think that we were going to get any color on, GB300 or incremental Blackwell products was probably just not going to happen. This wasn't the forum for that anyway. And I think so from a product standpoint, I think we know everything that we need to know. From a revenue standpoint, you're facing a little bit of a transition here, that you have Blackwell demand is very good. And you've heard these comments from Jensen in the past on CNBC talking about the level of Blackwell demand being insane. And he didn't really repeat those comments. But I think the issue that you're dealing with is Blackwell demand is really strong, but it's supply constrained. And Hopper, the sort of legacy product, still is the largest portion of that data center business. And so I think we'll still have a couple quarters here where there's meaningful upside. But I think the real upside is kind of into the back half of the year when you start getting that kind of full-blown Blackwell ramp. So I think, people would like to hear that. And I think they did hear that in some sense, but I think, they're trying to avoid those kind of really strong statements about Blackwell because it's not the main driver of the quarter. I think that's the combination of Blackwell and Hopper. So still quite optimistic about how this plays out, but I certainly see the upside being stronger in the second half of the year.
Despite these headwinds, Nvidia remains a promising contender in the stock market arena. Its current position reflects a slight dip, with shares down approximately 1.5% year-to-date in 2025. Yet, the foundations it has laid suggest resilience and potential for impressive rebound. Analyst forecasts continue to favor substantial growth driven by Nvidia's innovative technologies and strategic partnerships. The question remains, however, do you think there is any near-future upside for the Nvidia stock? Share your thoughts. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.